Welcome back to 7-Minute Options on Thursday evening, November the 4th. A crappy day. Peloton earnings came out. It's still too early to tell where it's going to open tomorrow morning, but Peloton reported earnings after hours today, just after the bell, and it was an insane move. Yesterday, if you look at episode 100, yesterday, you can see the sort of the table of where it was 24 hours ago when we put on the straddle, the 70-110 straddle, and the $60 strike was a 4 delta. So I just checked just before I came on. That's where Peloton is right now in after hours trading. It was at 60 just about an hour or so ago, and that is a 4 delta move. That is insane. That's an extreme outlier. But now basically my put is basically 10 points, $1,000 in underwater. Yeah, we collected 219. But right now we're $1,000 underwater. So it'll be interesting to see where that opens tomorrow morning. It could open a little bit lower than 60, a little bit above 60. My plan is to wait until Monday, see what happens to Peloton over the next maybe 2-3 days. And then probably Monday or Tuesday, I'm going to be rolling this out because at that point I'll be down to like 11 or 12 days, probably Monday. I'm going to be rolling this into the December expiration, and I'm going to try to establish a strangle or a straddle that is close to at the money without having to pay for it. In other words, I'll still try to collect a credit, similar to what happened with Zillow. So we had a position here in Zillow. If I take a look, here we go in Zillow, we had a 81.20 strangle. Zillow, of course, had a meltdown. It's at 67 now. And I rolled it for an $85 credit to reestablish a 75 straddle, hoping for Zillow to bounce. And Zillow is bouncing a little bit. So Zillow went down to as low as 62 yesterday during the day. And today it was as high as 69. So it is reverting back to the mean a little bit. That blue line is where that 75 straddle is. And again, I will be rolling that position again. But the point is, I picked up $80 in credit as I did that. Today, as Zillow moved back and reverted a little bit from that crazy outlier move, it's up $243 on the day. So I'm slowly clawing back that loss, but Zillow is still in quite a bit of a loss. So I'm going to be rolling that probably for a few more months. Peloton, I think something similar is going to happen. So if I look at Peloton right now in after hours, you can't see after hours trading here on, but right now if I look at the chart, I mean, we are off the chart. We're basically down here at this line. We're at the $60 level. That is by far the biggest move in Peloton this year. Absolutely insane. Started the day at 90, was around 86. There it is. It was 86 when it closed. And right now the bid ask is at 60. Absolutely incredible. So it went from 86 down to 60, $26 move. There has not been anything near a $26 move in Peloton this year. I mean, like the size of that candle there is a 105.99. So that's like a 6-point move there, maybe 7-point move, maybe like a 15-20 point move in like 3-4 days, but nothing like this in one day. I mean, it's quite incredible, but I do expect it to bounce a little bit. So after a few days, just like Zillow is bouncing now, I expect Peloton's going to move back towards 65, 66. And really, as long as it clears 70, we're okay. And if I can roll this down to the 67 or 68 strike, collect a little bit of credit, and wait for Peloton to move back to 67, 68, maybe I'll be able to roll it out a few more times and basically get a scratch. That is not lose money. Looking at IWM, this is the only trade I'm going to put on today. So what happened with IWM here is we got an iron condor. Initially, we had the iron condor. We rolled it a few times to reduce risk on the put side and then to basically close the gap a little bit. If I look at IWM, the history here, we started at the 198, 203, 203. So we started at $5 wings, collecting $1.16 credit. And then we rolled two sides, both wings. And of course, I can only roll 4 positions at a time. So I got to roll the calls first and then the puts. When I did the calls, I picked up $10. When I did the puts, I paid $2. But on the put side, I went from 198, 203 to 200, 203. So it's only $3 of risk on the put side, but there really isn't that much risk on the put side now because it's the call side that got breached. So what I'm going to do now, if I look at it 238, we're at 238.55. So we just breached the long call of the call spread. And so I'm going to try to roll up the 203s and collect a little bit more credit. So what I'm going to do is, here we are in the November 29th expiration. I'm going to try to close out my $3 wide put spread and reestablish it somewhere here. If I look at the 123 delta expected move, let's see, $1, $2, $3, $3. That's where it would look like I can pick up $47 in credit. It would still give me $3 in between my short put and my short call. If IWM, so I pick up $47 regardless, and then if IWM pulls back to the 233, 232 level, maybe even 234, I might be able to roll out both of these positions again, right? We're 25 days to expiration, so next week I'll be at like 18 or 20, and I can roll out both positions here and collect a little bit on either side. So that's the plan there. So yeah, if IWM doesn't come back and I can't roll these, then at least I lose 47 less. If it rolls back, I can lose both sides. As I make this narrower, it means that the overall position is going to lose credit premium slower and slower, which means I will be holding it longer and longer to get the time premium out of it, and that's fine. So these are just defensive moves here. So yeah, I'm gonna put that on. Actually, what I'm gonna do is because I won't really have a lot of time to monitor it tomorrow. I'll probably do it from my cell phone, but I'll open it at 50 just in case IWM moves a little bit back and opens at 237 tomorrow. Then I'll get a little bit more for it. And if I can't fill it for 50, then I'll maybe adjust it on my mobile phone and try to lower it down to 48, 49, maybe 47, 45, whatever it's going to cost me to fill. But I'm going to put that in to just tomorrow. So that's going to be good until tomorrow. And I might have to adjust it, but that's my plan with IWM. And then now that my buying power is getting squeezed. So tomorrow, if Peloton opens at 60 or thereabouts, I think my buying power is going to be $1,000 lower. So it's going to go down to maybe 1,800 or thereabouts. I am going to be getting out of this position here. So I had a really good position in SOFI about 2 months ago. I had a defined debit call spread. I had a short put that financed a long call. Everything was going great until I kind of gave up on SOFI because SOFI was down here in the doldrums. And I thought, you know what, why didn't I get rid of some of those long positions, sell them, get some money back, which I did. And of course, as soon as I did that, what does SOFI do? It takes off. And so now I'm in that position again where I have an undefined risk to the upside on this call right here. So I think I'm going to wait to see where it goes for the next few days. But before earnings, so earnings are, let's see, SOFI earnings are after the bell on November 10th. Today's November 4th, so that's Wednesday. So before Wednesday, what I'm thinking is, I'll get rid of this call. So I'll get rid of the 22.5 call. I'll just buy back. Right now it's for $274. I've collected more than that in premium over the last 4 or 5 months as I've rolled it. So I'm gonna just close it out. I'll leave the short put because I'm very bullish on SOFI. You can see I got this this butterfly center at 35, and that's a bullish position. So I do expect SOFI in the DeFi space to do well long term. But this call here, it shouldn't have ended that way. Anyway. I made some dumb moves and now I got undefined risk, and it's just been that kind of an earnings season. So I got smacked around on Snapchat, on Zillow, now on Peloton, and I don't want to go 444. So I'm going to close this one out. If this goes down a little bit instead of up on earnings and my put, that's fine. Like I'll just keep rolling out the put. I'm not worried about this SOFI dropping something a little bit temporarily. I am worried about this thing going up to 30 or 32.3 on the call side, and then I'll be chasing it. So I'll leave the short put, and then I'll just get rid of the short call. So that is what I'm looking at. I'm not going to make that trade until next week, just because SOFI has had 5 or 6 days of moving up. So if it moves down a little bit, then I'll be able to close that call out for a little bit cheaper. Save a bit of money there. Okay, that's it. Short video today. Earnings season I'd like to forget for sure. My Year-to-date P&L was touching as high as 4,000 about a month ago, and it will be under 1,000 tomorrow morning when this opens. So that's $3,000 of my yearly P&L, about 75% of my yearly P&L gone in one bad earnings season. Interestingly enough, it's just got a mental note. My losses this year came from Stitch Fix, Snapchat, Peloton, and Zillow. And all four of those were on undefined risk trades. Just something to keep in mind. And I think most of my profits came from defined risk iron condors, or defined risk put spreads or credit spreads. Anyway, at the end of the year, I'm going to look at all my trades for the year and figure out which ones were good, which ones were bad. This is the first year I'm really doing this, so I'm still very much learning. But yeah, these undefined risk trades, even like with Peloton, I mean, I went out to like the 7 delta, 10 delta. I thought I was pretty safe there. But anyways, I think if Peloton and Zillow revert like Zillow is starting to do, and I roll it out, I can get a scratch, but it might take a few months, during which time my yearly P&L and my option buying power will be severely affected. So it's a pain in the ass, but quick video. Have a good day. Thanks.